Good morning to all traders and welcome to this Thursday's Market Science video on FX miners. Markets continue to fluctuate between good news and bad news. On the positive side, we have got the Pfizer saying that the vaccine trials, the results actually, showing more efficacy now, and also an announcement that they're going to apply for emergency authorization to get the COVID vaccination out. On the other side, we have bad news, which is the bad news that we have been hearing over the past few months, the pandemic. The numbers are rising continuously, and this is, of course, having a negative effect in the markets. Now, which country, though, seems to be holding really firm is China. The economy and the numbers also indicate the same. Now, what they have done lately, and they have actually gained a lot of traction from investors, is they sold the first negative yielding bonds, and that, of course, is creating demand mainly from European debt investors, but also around the world. This is increasing, of course, the strength of the Chinese yuan. If you recall, it was only a few weeks ago that China sold 6 billion worth of dollar debt directly to US buyers, and that's why we have actually seen the dollar against the yuan reversing from the 7.2 level over up here. So we'll be starting with the dollar against the yuan. Another pair I wanted to have a quick look was the Aussie against the yen, a proxy for a risk on / risk off. That's because also we've had some very good Australian numbers in employment. Seems to be suggesting that for the short term that the Aussie might be a little bit stronger. Now, if you recall last week, we talked about this being a wave 5, right, in the cycle degree, and we're looking at an ABC correction to would have cycle 1, cycle 2, and we'll go up for cycle 3. Now, obviously, with the latest developments, I'm not really seeing, due to the correction, the depth of the correction, I don't see this as an impulse any longer. Okay, so I'm expecting these. You've got the W here, right, and the XW here to be a correction, which means wave Y can be expected higher once we reach, I believe, the 61.8 Fibonacci of the full upside move to the 7.2 or so, which is around the 6.41. Now, that could be one of the cases. One is that since we have a W, X, and Y over here, it could be a case where this W, X, and Y in the primary degree is going to become a triple zigzag. So we could see another X down here and a Z, okay? Or it's a W, X, and Y in the higher degree, right? In either case, I'm expecting more downside, okay? And I'm expecting more downside because we did take out the 50 on the first time, and now it seems like we're going for the second attempt, and I believe this is going to actually come in place quite successfully. We've had this move to the downside. This is wave 2, 1, 2, 3, 4, 5 for 3. And then we're going to see 4, and then we're going to see 5 down to the 6.41, which is also an intersection level with the ascending channel, as well as, okay, if we just pull up Fibonacci tool quickly, and we have a look at the latest downside move from waves A and B. This is exactly the 61.8 Fibonacci extension of waves A, B as well. So the 6.4142 is making an amazing cluster. The other pair we are going to have a quick look is the Aussie against the yen. In this pair, we are actually expecting the end of a triple zigzag, right, down to fresh lows in the long term, right? But during, of course, this move to the downside, we are going to analyze what we are expecting. Assuming we ended this wave X, it means now that we are indeed going for wave 3, okay? Then we're going to get 4 and 5. Potentially this is going to be an A, B, and a C. It could be, well, it doesn't look like it can be an ending diagonal, to be honest, but we never know. An ABC or a W, X and Y, okay? Now that said, this is wave one, this is wave two, and we'll go down, right? There is also, however, a scenario, since Aussie might be, due to the latest news, of course, a little bit stronger. It could be a case where we're going to see this moving higher, okay, to create a fresh high around the 78.50 or so, okay, 79 max. And this means that wave X would be over here, yeah, and then we should be looking for price to move lower. That would be what ABC, that makes this a W, right? It would be an A, B, and a C. Could be that this is a running flat over here for B, right? And then we're gonna see 1, 2, 3, 4, and 5. This could be an ended diagonal, to be honest, and then start moving lower. Now, we do get a signal, okay, on for downside on the MACD, both signals, actually a bearish divergence and a hidden divergence. But on the RSI, we don't really see that clearly, right? So for that reason, we might see prices moving a little bit higher with momentum, of course, and then looking for this zone to be a very good move to the downside. So that will be all for the day. Thank you for watching, and we'll speak again tomorrow.